Hi everyone, today we will be discussing how the Australian property market performed in the first month of 2022. I'll share some really interesting stats from the month of January and I'm sure you will find value in them. So keep watching. This is Adil, Director, Ariza Buyers Agency, helping everyday busy Australians to source high yield assets in high growth pockets across the country. In my previous videos, I have been predicting strong property price growth in 2022 or even beyond well into 2023. January 2022 has been no exception. It has shown above average price growth across majority of Australia. To put it in numbers, the average increase in Australian housing values has been 22.4% across the year of 2021. If you try to put it in terms of dollar values, then on average, an Australian home is worth 131 grand more in January 2022 than it was at the same time last year. That is a significant increase. And that increase has been led by Brisbane, where the average price of a home has increased by $159,000 in the last 1 year. Now moving into January 2022, this table is so much powerful. Here we can analyze the growth across the 8 capital cities in 1 month of January. And if you notice, that growth has been led by Brisbane and Adelaide, where the housing values have increased by 2.3% and 2.2% respectively, which means only in 1 month of January, the Brisbane house prices have increased by 16 grand on average. In the same period, the housing prices for Adelaide have increased by an average of 12.5 grand. That is an increase in just 1 month. And you can see such a strong demand which is driving the prices up in these 2 cities especially. Followed by Brisbane and Adelaide is Canberra, which has shown a growth of 1.7%, which is very, very strong and above average again for 1 month growth. Followed by Canberra, we have Hobart, which has been showing consistent growth over the last 3 to 5 years. And even in the month of January, it has shown growth of 1.2%, again, which is above average growth for the capital cities, which we'll be discussing in a short while. So as you can see, the prices have been going up in all the capital cities, which has been led by Brisbane, Adelaide, followed by Canberra and Hobart. In some of the other cities like Sydney and Melbourne, you can see the price growth has been softening, which means the prices are increasing in value. They are not going down, but again, they're not as fast or as robust as they were before, which is a sign of a maturing market. This increase in housing values, especially in Adelaide and Brisbane, in my view, is driven by the socioeconomic conditions. A lot of funding is being pumped by the state governments for infrastructure projects. There's a remarkably low supply of advertised listings, which is driving the prices up and increasing the competition. The housing affordability is also a very important factor. A lot of people who cannot afford investment properties in Sydney and Melbourne are now looking at Adelaide and Brisbane because they can still find good quality properties. For example, in the range of 400k, 500k, 600k, 700k properties with really good rental returns. And the capital growth is also very, very promising. So these are some of the things which I believe are pushing the Adelaide and Brisbane market prices upward, and this trend will continue to grow. I know there's a lot of discussion around hikes in interest rates. In my view, the interest rates will not be increasing by more than 25 to 50 basis points in the next 1 to 2 years, which means there won't be a lot of pressure on the mortgage repayments, which means that Adelaide and Brisbane markets will continue to show this growth moving forward. It will be really interesting to see the data for the month of February once it comes out, and we will do another video to give you that comparison as to how the markets are trending at that point of time. On the other side, the slowing trend of price growth in Sydney and Melbourne, in my view, can be attributed to a larger deposit hurdle, which is required because of higher property prices now. Tied up with low income growth, the incomes have not been increasing at the same rate. as the property prices have been going up, and also the inventory levels have increased in the recent couple of months. There's more inventory, more stock available for people to choose from. Again, that inventory level is still less than the average than what it was same time in January 2021. But again, it is much better than what it was 3 months ago. So that's why we are seeing a bit of a price slowness, or a slowness in growth of price, I should say. The prices are still increasing. They will continue to increase. There's no bust condition coming. Sydney or Melbourne market will not crash. Please don't take me wrong. But the increase or the growth in prices would be more realistic, more predictable, and more reliable. So in my view, if you are looking for property investment, then definitely as a short-term strategy, you should be targeting the areas of Adelaide and Brisbane and the outskirts areas of those two capital cities, because that is where the growth is really happening. And as another interesting stat, the average property growth across all capital cities in the month of January has been 0.8%, which means the prices have increased 0.8% in 1 month across Australia. Now, compare that with 2.3% growth in 1 month across Brisbane and 2.2% across Adelaide. You can clearly see where your money needs to go. If you need any help with property investing, feel free to click the link below, get in touch with us. We are more than happy to help to make you grow your property investment portfolio, and we'll be there for a free, no obligation chat to discuss further requirements. See you on the other side. Thank you.